The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the August 5th terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone is off to a great start of their day. Let's make sure that you and I, that we do all that we can do to have a terrific Tuesday. I know I'll do everything I can during the next hour to take a look and teach you about what the markets are doing, utilizing some price projection tools, the A to B equals CD pattern. We'll take a look at Fibonacci expansions and retracements. We'll take a look at candlestick charting, because those are the signs that the bulls and bears make for you and I each and every trading session. We do have a market that is down at the moment. Our call number is 877-927-6648. Internationally, you can reach out to us at 727-445-1044. This is Terrific Tuesday. I'm Steve Rhodes, and welcome to the show right now. Dow Futures, forget about that. Dow is off 78 points. They're trading at 16,491. 7777 is what just crossed my board out there. S&P, it's down 10.5 points at 1928. NASDAQ Composite up 26 points, trading out at 43.58. Russell 2000 down about 5, trading at 11.19. NDX 100 off 27. New York Stock Exchange down 6. New York Stock Exchange, down 60 points out here. Volatility index up 52 cents. It's trading out at 1564, well above the 50-day exponential moving average. So what does all this mean? How are we going to put this together? Well, that's why you tuned into the show, and we'll use all of our best efforts to show you levels of support and resistance, what the market is likely signaling to us. Now, it's still early in the session. We've only been trading for a half an hour, so we've got a lot of time left in the day's trading session. And much of what we're going to take a look at is going to be based upon how the market closes today, but there'll be good enough signals. Moving to the upside here before we get into it, you've got Regeneron Pharmaceuticals. They are trading up 2%, up $7 and change. Out with numbers here. They generated net income of $93 million versus $87 from the prior year. They're trading up. You've got Acorn Inc., AKRX. That's up 7.5%, up $2 and change. Also out with numbers, $150 million versus $77, and net income of $8 million versus $12.6 from the prior year. Concur Technologies out here, CNQR, up 3%, up about $3. RTI International Metals, up 10%, up $2.65. Avis Budget Car Group, CAR, is the ticker symbol. They're up 4 points out here. Netflix up $3. Telephone data services up a couple of bucks. To the downside, Pioneer Natural Resources, PXD, off about $8 and change. They, too, reported numbers. The revenues go like this: $953 million versus $1.16. So missing top line. On the bottom line, generators, they were able to control the bottom line. They generated net income of $1 million versus $337,000 from the prior year. Nonetheless, they are leading the charge dollar-wise to the downside. Not far behind is Demandware, DWRE off 13%, Carbo Ceramics, CRR off about 6%. Retail Me Not is on sale. That's a fire sale out there. That's up 25%. Zebra Technologies down 7%, off about 589. Okay, so we've seen a little bit of a bounce here in the futures marketplace. Let's go start and take a look at the NASDAQ. We're going to take a look at the NASDAQ futures out here. The reason is because I can show you the very easily. I've already drawn it in. We're taking a look at the rising price channel. Now, it's a little different than a trend line. I'll put a trend line out here as well, so you'll see the difference. So the trend line, now what I'm doing is I'm coming back into the April 15th time frame. So we're going to draw a trend line, and let me just put this right here. So there's the trend line. And that's going to be in white. So it's white. It's an arrow key. It's a rising trend. Gives you the direction of the trend. Now, the trend line, I'm actually using the emotional part of the trading session from April 15th. You see the body of a candle, when you take a look at a candlestick, that truly is the essence of price. The wick of the candle, the shadow, the upper-lower shadow, the upper-lower wick out there, it would make more sense to call it a wick, right, because we call it a candle. That's just the extreme emotion that took place during that trading session. In this case here, we're looking at a daily chart. Now, we can use a trend line tool. The trend line tool says, okay, go ahead and use the actual lows or highs of the extreme emotional part of the candle session. So that's what we've got. That's the white line. And what you can see right now, taking a look at the trend line, price is bumping its head right up against that trend line. Now, if it breaks that trend, does that mean that the trend is over? Well, I would hearken to say that it's just as important to go take a look at the body of the candle. You know, it's interesting. Before I, for those who are longtime listeners here at TFNN, our man Bud Rolfs is the one that has taught us about his channel lines out there. What I found so complimentary about what Bud was doing was he was using the body of the candle. He was using the essence of price, which is really what Japanese candlestick charting is really all about out there. And so therefore, when we take a look at those channel lines, that's a little nuance or difference, something that you will see that's special here at TFNN. So we're using the actual open of the trading session from the candle session of April the 14th. And what you want to have is you want to have at least as many co-located. By co-located, I mean it does not matter whether it's an open or a close out there. And you want to try to find as many as you can. Well, if you do that, you'll see that you'll be using the open of the candle session from May the 9th. You'll be using the close of the session from May 15th. You'll be using the open of the session from May 16th out there. And guess what? It runs, it doesn't run into anything more than that. That's the yellow line going across my screen. Just to make it easier for him, I'm going to delete the trend line out there. So here's the channel line. And this is really what we want to be watching inside of the NASDAQ. Because if the NASDAQ, arguably, and maybe the cap-weighted stocks with inside it, are really what is holding the market up thus far. So we want to watch the NASDAQ, because if the NASDAQ here begins to crack, and how will we know if it's cracking? Well, we'll know if it's cracking when it breaks through this rising price channel. Now, any trend line, any channel, when you break through it, the normal thing is to come back and try to retest and try to get back inside that trend. So I think that this is one of the important charts to be focused on and paying attention to today, and that is the NQ. Now, as we speak right now, you've got the Dow traded off 61, S&P trading down 8. Now, I'll share with you a chart. I've just got to find it, that I shared with subscribers this morning. For those of you that are longtime listeners, you know that I utilize the VIX index really in a number of different ways. Well, I can do this here a couple of different ways. We utilize the VIX index. Let's pull this up on our chart. When the VIX is trading above the 50-day exponential moving average, that's the red line on my screen out here, that's when you see the most damage that is done inside of a market. You'll see some little yellow sectioned areas. The top of the top half of the chart, that's the VIX index. The bottom half of the chart happens to be the S&P 500. So you can see once the VIX index gets above the 50-day exponential moving average, what that is priced at as we speak right now is 1278. The VIX is trading at 1547. It's where the damage can be done in the market. The question is, can you try to find some type of counter trend play? Can you call a top in the VIX out there? Because if you can do that, you typically can also find a bottom in the VIX. Well, the VIX also has a couple of different other uses. So I'm going to switch over. It's just going to take me a moment here to find that chart out there. Oh, that was not it. Let me try this spot here. Okay, that looks like the area. There we go. Now I'm going to put this up on my screen. I don't think subscribers will mind me sharing with you this information, but if you've never test drove Mastering Probability, get over to the homepage at TFNN.com. That's my daily newsletter service. It is packed with information that will assist you with your trading. So in addition to the trades that I put out there, it assists clients with helping them to manage their trades. Now, the VIX index also has this characteristic type pattern when it has a one-day rate of change in excess of 10%, such as it did last Thursday when the market creamed down. The VIX index, I don't have that chart here in front of me. I could pull that up, but it was about a 32% one-day rate of change. What do I mean? What do I mean by one-day rate of change? It's just the difference between yesterday's close and today's close, subtracting that difference and dividing it by yesterday's close. In that case there on Thursday, if you went ahead and took a look at Wednesday versus Thursday and divided that difference by Wednesday's close, you would have seen a one-day rate of change of 32%. I believe it was 32%. Well, when you see that, typically, historically speaking, I can tell you you've got and I mean historically going back from the time that the VIX began to track, you've got a 63, 64% chance. So this is a lot of years worth of information out there. A chance of seeing a bounce in the market within 1 to 2 trading sessions out there, and that's really what we saw. We saw an intra-session bounce out there on the trading session of Friday. It ended up giving it up going into the close out there, but nonetheless, it went ahead and it did its deed out there. Now, what's interesting here about yesterday is yesterday we saw the exact opposite. We saw the VIX actually sell off, and it had a one-day rate of change, but not as a positive number. It had a one-day rate of change that was a negative number. It was down by 11.22%. And anything that's 10%, well, 10% will qualify. So anything less than 10% or greater than 10%, that kind of discount out there. It doesn't really have as much meaning out there. Hey, 9.99, maybe you cut it a little bit of slack out there. But for my testing purposes, it's much easier to just take 10% or greater, 10% or less out here. Now, if we take a look at the chart that we're taking a look at on my screen out here, this happens to be the S&P 500. And if you take a look at trading sessions, when the VIX has had greater than a negative, that's how I got to say it, right? Greater than a negative 10% rate of change in one trading session. Well, if you look at that back here, if you knew that its pattern behavior, by the way, let me tell you what the pattern behavior is predominantly. It's the beginning of a move. It's the initiation move inside of a market out here. If you take a look at what took place back in February 4th as an example, what you saw was the beginning of an initiation move. Now, that very next session on February 5th, the market wasn't so sure, and we saw a move down below, and it did get below the prior day session, even below the low from the trading session of February 3rd out there. But nonetheless, we saw on the very next trading session, which was February 6th, so this would be tomorrow, we saw again another one-day rate of change in excess of more than a negative 10% number. How's that? Trying to be as accurate as I can, because that had a minus 13.6. So on the trading session of February the 4th, a minus 11. The following session, minus 13. What does that say? That says, hey, if we don't see a close below, in this case here, yesterday's low, but I'd really say Friday's low out there, it's got to make you say, something to think about. Likewise, if we see a close below Friday's low out there, it's really easy. It's a real easy call. It's real specific, and I'm going to show you what that is when we get back from this first break. Here on March 17th, we saw that little one-day rate of change of greater than a negative 10%, and we at least saw the market move back to its previous highs, March 11th. In June 18th, you saw the beginning of initiation move that took us into the highs out here on July 24th. Hey, folks, if I keep moving this chart back here, you can take a look at December 18th. That was Uncle Ben's going away party. A negative rate of change of minus 14. That began initiation move as well. Hey, how about October 10th, 2013? You kind of get the picture of how important this is? Well, let's go take a look at the bearish side of this as well when we get back from this break. This is Steve Rhodes. This is TFNN. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow taking back some of its early losses out here. Right now, though, trading down 47 points. S&P down 7. NASDAQ down 15. Russell off a point or so. So let's go back and take a look at the S&P and the VIX chart because of so much substantial meaning behind the moves out here. And really, that's so much of the information that you get here at TFNN on a daily basis. So again, we're taking a look specifically at this stage here is when the VIX index has a one-day rate of change in excess of a minus 10% move out here, and that's what took place yesterday. And the reason is because oftentimes it is the beginning of an initiation move to the upside. And so to see the market actually trade higher today, maybe close out higher today, that's really what the expectation should be. But nonetheless, we need to prepare ourselves for what if that doesn't happen. And that's really what I want to get into next. But before I do that, if we just simply take a look at the swing point high against the S&P that we're looking at, so the July 24th high down to low that was put in on Friday, what we'll see is yesterday so far was nothing more than what we refer to as a dead cat bounce. And that's where the market makes a 0.382 retracement. You see, when we take a look at Fibonacci numbers, what I like to use is 0.382, 0.618, and 0.786. A number of people might use 23.6. Some also use the 50% level. And I'm not saying that's wrong. It's just Steve-O likes to use these three floors to help identify where price might move to. So what we saw yesterday was a dead cat bounce when we take a look at the ES Mini. Now, if it can close above, the S&P 500. if it can close above 1945, the 0.382 level, then that offers the promise of moving up to the next floor, which would be 1962. And really, if you take a look at the high of the session, the sell-off, which was July 31st out there, 1965. So 1965, 1962 would really be your price target. If, on the other hand, and again, I was going back earlier as we were going into break, I was showing you the number, because I keep track of all these occurrences. I need to, because it's those anomalies that actually provide us with just a ton of information about what the market is likely to do, and you and I were just like Indiana Jones, we're looking for little clues, or maybe the guy in National Treasure, what was his name? Gates. William Gates or something like that out there. Of course, that was a movie. This is real-life stuff. So these types of clues out here, these are real-life clues. And you can see, going back here into April 19th of 2013, a minus 15 reading. Back here as the market was making a low back on February 26th and February 27th. You can see you had those one-day rates of change. Now, with the VIX index being up at the level that it is, with yesterday being able to have a minus 12% reading or whatever it is, with it being up there, for it to have a couple of those, that'll be a huge message to both you and I as to what the market is doing. I don't care if the markets came down lower with volume or anything else. I will utilize this tool as much as any other tool out there, just simply because of the reliability, right? Because of the probability, because of mastering probability, which is really what it's all about. Now, we got to fast forward to what happens if, in fact, we see a close below Friday's low. And that could happen today. I am not ruling that out at all. And that's going to take us back into, and the reason why I'm coming back here now to the highs from 2007, as soon as I can get back there. Come on, where are you? Come on, where's the highs in 2007? Okay, we take a look at the highs in 2007. I must have got 2010. We take a look at the highs in 2007. That's October 11, 2007. Here's the high out here. And that, I don't know if that formed a butterfly pattern. Look, let's not get into whether it did or it didn't. But what I want to show you here is, let me pull this down. On October 31st, 2007, here is your one-day negative rate of change of greater than minus 10%. It was 12.05%. That was on October the 31st out there. And take a look at what really took place in the let me put this at the top of the bar out there. There you go. So it's lined up. The black line is lined up with the bar. And take a look at what took place the very next day. Market went ahead and moved lower. It said, hey, I don't care about your stinking minus 10% or greater rate of change out there. I'm moving lower. Look what took place out here on the trading session of November 6th as the market made a minus one-day rate of change of 12.01%. Look at what happened out here on November 13th, 2007, as the market made a one-day rate of change of minus 22. You kind of get in the picture out here. Take a look at what took place here on February 21st, 2007. Okay, in that case, you got a 2-day. So you got, in essence, you got the day of, and you got a couple days after that where you had a little bit of a counter-trend rally. That's why it's so important for us to be watching what goes on here, specifically because inside the Dow, I'm showing you the S&P out here, because of its bearish patterns that are in place as we speak right now. 877-927-6648. Steve Rhodes, TFNN. We'll be right back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments? Then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is off 28 points right now. Russell 2000 has turned green out there. It's up $1.50. Before as I was doing the first hour, 9 to 10, and don't forget, we kick things off here at TFNN each day now at 8 a.m. John Logan kicks us off the Global Market Pulse. We run 10 hours of live programming each day from 8 a.m. to 6 p.m. out there. So an entire day of market technicians are able to give you a call as to what the markets are doing right at that very moment as they change course and where things are likely to head to. So I think with regard to yesterday's action inside of the VIX index, take a look at what has transpired. I think it's a fairly good template for us to be able to identify what is going to, exactly what happens with regard to price. If it moves up higher from here, you've got the message that was out there that suggested that, giving you the parameters inside of the S&P to pay attention to. We also took a look at the rising price channel of the NQ out there, and price has not pierced through that area. Likewise, any failure, what that means. And we'll take a look at the longer-term pattern that is out there inside of the Dow. But as we're going into the last segment of the last show, I had a request to take a look at ticker symbol CGW, Guggenheim S&P Global Water Company. So let's go take a look at it. It's off about 8 cents this morning, trading out at 22.27. So let's take a look at CGW out here and see what it's doing. Let's take a look at, well, this is the weekly chart up on my screen as we speak right now. The weekly chart has has moved into a bearish zone out here. It's got a bearish EMA cross. That's never a good thing. It's trading below its weekly profile unfair low. That's never a good thing. It did that last week. 29.06 is that number. It's trading at 28.27 out there. It's got a high volume bar that sticks out right here. Now, that high volume bar doesn't have wide price spread, so it's hard to really say what kind of meaning is behind that. Nonetheless, it is where we have volume, which is the week of January 6, 2014. That likely becomes a target area, 1.4 million shares, and that's anywhere between $27, even Steven, and $27.44. But we'll take a look at the daily chart as well. So the weekly chart, it had a little price relative strength divergent pattern, meaning that on the week ended March the 3rd, 2014, it's made a high of 29.47. It had a relative strength 14 period. Relative strength reading to 73.69. Made a higher high on the trading session the weekend of June 30th with only 69.70 as its relative strength reading. It gave you the RMI, the Rhodes Momentum Indicator signal, and that was on July 7th as it traded lower out there. If we take a look at trends, though, let's take a look at trend lines. Let's not forget about our friends, the trends out here. And if I were to take a look at that, let me see. Let's come back all the way down to this low into October of 2011 out here. Quite a ways away from its trend line. Of course, that's a dangerous thing because if the trend is your friend on this, the trend is in about the $25 price point level. Even a shorter-term trend, let's go take a look at the shorter-term trend, which looks to me like that has been busted for sure. That's coming off of the June 24th, 2013 level. Yeah, that trend easily broken out there. Let's take a look now at the daily chart. Now, the request was just to take a look at it, so I don't know whether it was because somebody was looking at it as a buying opportunity, selling opportunity, what have you. It has made on a daily basis. It has made, how about that? It's also mooed like a cow, but it really made a 100% move of a move. That means the swing point here, this unusual trading session from May 14th, unusual because it gapped down. The prior session, if you take a look at it, May 13th, it closed out at 29.30. Very next trading session, it opened at a price point of 28.13 and then made its way all the way back. Now, that's not a bullish candle by any stretch of the imagination. It's green. Looks fairly bullish, but really not a bullish reversal signal at all. Excuse me when I take a little swig there. But it has made a 100% move of a move. Can't really call this a consolidation pattern because it was just a double top pattern between June 20th and July 1st out there. The daily basis, it was also making a price relative strength divergent top out there. So if it gets below the current set of swing points, which is the April 15th level, that's at 28.13. Very good chance of what it will do is it move down into its next swing point low, which takes you back to February the 3rd out there. If I take a look at A to B equals CD patterns out here, give me a moment. A to B equals CD patterns inside this equity. This shows that the price projection, it's already made the one-to-one, made the one-to-one 0.272. Its next level down is about $27.94 out there. So I hope that that is helpful to anyone that was looking at Guggenheim S&P Global Water ETF out there. Let's go out to Chicago to Robert. Robert, thanks for calling. Thanks for listening. How you doing this morning?
Oh, Steve, thanks very much.
Good, good. You're taking a look at Procter & Gamble. Tell us what you're doing, what you're looking at, the time frame that you're trading it or looking to get in or sell it. Give us some indication as to what you're looking at.
Yeah, I'd like to buy it here and sell it up at the highs, 85, 82.
Okay. So we're taking a look at Procter & Gamble. Right now it's trading out at 79.43. And what Robert is looking at is getting into it today and choosing the 82 level. Now, you're choosing 82 because of the prior swing?
No, I'm wondering if you think it'll go up toward, I'm sorry, I didn't mean 82. I thought I might buy it here and look for it to go towards 85. 85, 82. It's high.
Okay.
It's high. Or do you think
even if that was a Freudian slip, I would say, hey, the 82 is a good spot for you to take a look at. Let's say that Procter & Gamble is finished with its move to the downside. So let's use that as a premise out here. It did have an island reversal. Is that one of the things that you were looking at?
No, I wasn't.
Okay.
Tell me about that.
I'm sorry?
Can you go, what's the significance of that island reversal?
Absolutely. So one of the most, thanks for asking, one of the most bullish reversal signals that you can see inside a market, bullish or bearish, is what's referred to as a island reversal. They're hard to do, and they are something that you always want to keep your eye out for. What will occur here, Robert, and I'm going to use the 3-candle version of this, but I'll give you also the version of more candles. If you take a look at the trading session from July 30th, on July 30th, the actual low, not where it closed, but the actual low was $78.14. The very next day, it gaps down. The high of that session was $78.01. So there's a little gap between $78.01 and $78.14, a 13-cent gap. And that was important because on the earnings release date, which was August the 1st, or maybe it was after the close on the prior day, it gaps up. And what it created there is what's referred to as an island, where you have a gap between these 3 trading sessions out there. And that is one of the most bullish type of candle configurations that you can have. That's what you like to see at a reversal area. Now, just as important as how bullish it is, there is nothing more bearish than a failed bullish signal. So if you were to be long this position here, long Procter & Gamble, and you see a close below 77.29, it is signaling to you that it wants much, much lower price out there. So does that help understand what an island reversal is?
Yeah, it does, very much so.
And what I will tell you is that in an individual stock, an island reversal is way more important than on a, let's say, something that tracks a index. So when you see an island reversal on the SPYs, the IWM, maybe a ETF like Joe if you were trading coffee or something like that, it doesn't have as much meaning. Maybe if you see it on the GLD if you're trading gold, because the underlying instrument is really where you would need to see the island. On an individual stock, it has a ton of meaning out here. So you've got a bullish reversal signal out here. Now, I will tell you that from a daily market profile standpoint, 78.64 is its unfair low or its support level. You really don't want to see it close below that as well, but ultimately you do not want to see it close below 77.29. Now, if you were to take a long position here, what that would suggest is that you'd really want to look at towards that 82 level as maybe your first target. And that first target would be what I'm looking at here, Robert, is a swing point from July 10th. And the high there is 81.91. So when you said 82 and you were just rounding up, that would really be my first target as well. If it can close inside of 81.51, that is the actual swing point high from back on April 28th. And it can do that with more than 11 million shares, as well as, it can do that with more than 11 million shares. Then you might be able to get up to the $82 level. But I think you mentioned 85. So I'll come back and see what's up at the 85 level. Is its swing point high from November of 2013. Now, what I would also say is that inside of Procter & Gamble, we'd really need to take a look at the current trend, and the current trend is to the downside. So you've got a little bit of competition, or it has some competition, and you can draw a trend line down here, and that trend line comes off of that 85-ish area. 85.82, which is the November 25th, 2013 high. And if I use that as the top of the trend and probably use as a signal, looks like a little shooting star, that's a reversal candle from May the 9th out there. And that high is at 82.80. That's also going to be a trend that you are up against inside of Procter & Gamble. So it could easily run out of steam around $81 and change out there. Does that help?
Yeah, very much so. Absolutely. And Procter & Gamble does pay it's yielding around 3%. So that also plays into what I would like to do, too. So that's wonderful.
Yeah, now the thing you got to deal with here is that when you're taking a look at trading and investing, and were you able to catch the first part of the show where I was really elaborating for quite some time on the VIX index and the meaning of yesterday, and then what a failed pattern there might mean?
Very much so. And I think what you're alluding to now is you have where's the trend of the market here.
Yeah.
And so I did listen to that. It was wonderful analysis.
Okay, so because what I want you to do, Procter & Gamble is part of the Dow stocks out here, and if we take a look at it, what you want, the biggest issue that we've got is really inside of the Dow, and I'm going to come back and pull up. And so when you take a look at overall the market, you've got to get the broad market forecast first, no matter what. Now, look, just because the market's going lower, that doesn't mean we don't have stocks that go higher, but you'd sure like to be trading in the direction of the overall market. And Correct. It's the Dow that's got the most bearish of patterns out there, and I'm going to put that up on the screen here. So it's just something for you to be careful about when we're taking a look at it. And it's this, Robert. It's on multiple time frames. That's why it's really so important out here. So on the daily time frame for the Dow, it made a textbook ideal 3-drive to a top pattern. And it did that on the trading session of July 17th. And it's just like the island reversal is one of the most bullish patterns, a 3-drive to a top pattern happens to be one of the more bearish patterns as well. If it was an island reversal at the top, I'd say it's even more bearish. So on a daily basis out here, you've got one of the most bearish patterns that has confirmed. And what I mean confirmed is we've gotten reversal signals. We've gotten bearish reversal signals as that was forming. If I were writing a book today, this is a pattern that would absolutely go in there. And so since you and I were writing books each and every day out there, it's important to notate. On the same chart that I've got out here, it's got the Bradley model out there, which is utilizing planetary alignments which means it's done well in advance, thousands of years in advance out there. That suggests that the market wants to move lower. We can't really measure how far it wants to move, but it's suggesting it wants to move lower. That is on the daily chart. On the monthly chart, Thursday's price move July 31st was as damaging as you can possibly get. And what I mean by that, I'm going to pull up the Dow now on a monthly basis out here, and I'm going to try to expand this out. What the Dow was doing was it was making the exact same pattern that it made in 1928, 1929, before the crash. Now, I'm not referring to a crash scenario here. I'm just talking about a market top. The exact same pattern in 1987. Now, I've just pulled 2 crash periods out there. The exact same top in 2000. The exact same top in 2007 out there. And what that is we saw on a monthly basis, we saw price moving higher, doing it with less relative strength than having a reversal session. The reversal session last month inside of the Dow, bearish engulfing and key reversal session. What I mean by that, Robert, is it took out the high and low of the prior month, June, and closed lower. That was all that it needed in order to form that key reversal session. So it's really important out here to watch. Now, what this really needs, it needs the month of August to close lower. And what I will tell you is that during a second-year presidency, doesn't matter whether it's a Democrat or a Republican, that the month of August and September, the market moves lower. So you've got that to kind of put into. I hope I haven't confused you, but instead giving you at least some information for you to pay attention to. So I'm not saying that taking the trade is a bad trade. You just got to be very careful out there because of the signals.
That's excellent analysis. Thanks very much, Steve. I appreciate it.
You bet. That was Robert in Chicago, and that was taking a look at not just Procter & Gamble, but also taking a look at the broad market forecast, which is just as important as understanding what's going on when you are taking a trade out there. This is TFNN. This is Steve Rhodes. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. We've got the Dow trading up 51 points, S&P down about 6, NASDAQ off 7. It's Russell 2000 trying to lift the tide out here. It's up about 2.5 points as we speak right now. We're going to go out to a beautiful city, Park City, Utah, to our man Peter. Peter, thanks for calling. Thanks for listening. How you doing this morning?
Hey, great, Steve. How are you?
Excellent. Thanks so much for asking. You are our man, the Euro trader. You're up early every morning trading this vehicle, aren't you?
Yeah, like 12:30 here.
Yes. So when do you sleep?
Usually kind of like 11 to like 4 in the afternoon.
Oh, I love it. There's a man full of energy out there. Now, tell us what. How can I help you on the Euro? Tell me what you're doing and the time frame specifically that you're looking at.
I'm looking at the daily right now. I've gone through and spent a lot of time kind of just going through it. And last week's low is an exact 1.272 within one tick in the futures. We took that out this morning. So I'm looking at like the 1.618 down to 131.99, the ABC down to 132.14, and a 0.618 from the 127 lows. That comes in at like 132.25. So my thoughts are basically, do you concur? B, would that be a logical spot for this thing to stop and actually reverse?
Okay, so you're looking at the daily chart. Now, you use the 1.272 expansion of which set of swing points were you using?
I used
there?
the 139.93 high. And
139. Okay, so you're using all the way up on May 8th. Okay,
correct. And then down to the 135.02.
Okay, so you're using all the way back down to maybe January 31st or so.
Yep.
Right around there.
And it went January. No, this was June.
February.
June. Yeah, no. The 139.93 was in the last. It was May. It was on the ECB meeting.
Yes. Well, let me answer your question this way. So you're as far as where do I think the euro is going on a daily basis over time? Right now, it's in an A to B equals CD to the downside.
Correct.
And that suggests to me that it's actually not going to do a 1-to-1, but more like a 1 to 1.272, which would say right around the 1.307-ish type range out there. Maybe a little bit lower. So I think that is the longer-term outlook for the euro. It tried to break out of a descending price channel. It had every opportunity to break out, and it failed. So now it's likely going to do that. On the weekly chart, and it's below market profile lows. So 134, 1.3416 is a level to be watching. If it gets back above that, maybe because you're asking, hey, where does it, I guess is the question, because it sounds like our longer-term outlooks are the same, but you're kind of saying where's the next spot where it could bounce from?
Correct.
Okay.
And that's where I came in at like that 132 area, 132 and change.
Okay. So if we take a look at spots where it could bounce from, I know that you follow Basil's work, so let's do this.
Absolutely.
Yeah, so let's come and take a look at...
I can give you a quick update. It's an E/A on the daily, and it's still a trough B down on the... weekly.
Yeah, so I've got it as so you an E, if you will, right? As you were saying, and so you got what
it could be because it was a very quick reversal.
It did a very quick reversal, but wasn't within 2 trading sessions. Wasn't an inside bar. I've found in taking a look at it that if you got an inside bar and then move down, then it more likely, recycles out there. But Basil's going to be up next. The A to B equals CD pattern is one that's got priority as we speak right now. I wish I had more time to go through this with you. I'll do that. I'll take a look at the euro a little bit more tomorrow morning.
Fantastic. Thanks, Steve.
You bet. That was Peter in Park City, Utah. Hey, folks, stay tuned. Our man Basil Chapman is up next. Thanks so much for joining us. Have a terrific Tuesday. Look forward to seeing you tomorrow morning.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.